Hey, good morning once again, options traders. And I wanted to post a video to show you just how easy it is to understand gamma once you know the secret. And the reason I decided to do this is I still hear a lot of traders making gamma unbelievably complicated. And especially when they're trying to figure out positive gamma or negative gamma and how is that affecting your deltas. Well, again, it's actually quite easy if you just remember one point. What is that point? Well, before we find out, please be sure to click like and subscribe. Definitely very much appreciated and always helps to promote the channel. So first off, let's take a look at gamma visualized. So this black curve is the risk graph at expiration. So you can think of this as maybe the final 5 or 10 seconds of an option's life going into the expiration bell. That's the only time you should be looking at that black curve. However, prior to expiration, let's say with maybe 30 days to go, you're going to be on a curve like this blue line. And as time passes, that blue line slowly starts to march towards the black line, and right at expiration, it becomes the black line. But if we look at the current curve, again, let's say maybe with 30 days to go, do you see how there's a bend in that graph, or there's some curvature to it? And that curvature is really what gamma is showing. So at any given spot on that curve, if it's fairly straight, there's not a lot of gamma, but if there's some curvature to it, then we have more gamma. So what is gamma showing us? Well, to recall what gamma shows us, it's the rate of change of your delta. So if we look at this blue line, there's a certain angle to it at various points. We can see it's getting steeper as we move to the right, but down here it's fairly flat. And so there's not a lot of delta. But as we move to the right, as the stock price moves this way, we start moving up the blue line. And so now it's getting steeper, which means we are increasing those deltas. As the stock price moves further to the right, the blue line is getting steeper, so we must be adding to those deltas. And that's what gamma is showing you, by how much you are adding to those deltas. That's what that curvature is showing you. So just remember that gamma equals the curvature. So to see how it comes into play, as another review, let's take a look at a stock, let's say trading for $100, and we have an at-the-money call trading for 5. Our broker's platform says that the delta is a half and that gamma is 0.05. What this means is that if the stock rises $1 right now, and that's important, not 5 minutes from now, not next week or next month, it's an instantaneous increase in the stock's price. So we go from the current price of 100 to 101. What happens? Well, the call option is going to increase by delta. Better way to think of it is that it's the percentage change of that stock's price. So if the stock makes a full dollar move, delta tells you that you are picking up 50% of that dollar move. So this call option would be expected to rise from 5 to 550. It is not going to rise from 5 to 6 like a lot of people would think. It's only picking up 50% of that dollar move. Now, if the stock were to move 50 cents, delta says you're going to pick up half of that, or 25 cents. So you would expect that $100 call to trade for about 525. However, once that happens, once that stock price moves, you are now going to get a new delta and a new gamma. All of your Greeks change all of the time, unless you start getting super deep in the money or very close to expiration. But for the most part, they are always changing. So what's your new delta going to be? Your new delta is going to be the old delta plus gamma. So there it is. The old delta was a half, gamma was 0.05, so now we get a new delta of 0.55. So the thing to understand is that gamma is showing you that the call's delta rises by gamma. That's what that curvature in that risk graph is showing you. Now, the area where traders get trapped is in a very basic mathematical concept, and yes, I know it can be confusing, but it's just to understand a number line. So we pick a number way out here, let's say -5, or it could be -100 or -infinity. You're just picking a number out here to the left. And as we add 1, we start moving to the right. Eventually we hit 0, then we hit +1, +2, and so on. But the thing that you want to understand about a number line is that as you move from left to right, the numbers are increasing. Too many times traders say, well, we went from 5 to 4 and then from 4 to 3, so the numbers are decreasing. They're not. That's what we call the absolute value. You're not accounting for the negative sign. You're just looking at the size or the magnitude. But the number -5 is smaller than -4. Or conversely, we could say -4 is bigger than -5. -3 is bigger than -4, and so on. Every number to the right is getting bigger. And conversely, if we move from right to left, the numbers are all decreasing. Now, once again, traders will find this easy, going from, let's say, 5 to 4, 4 to 3. They can see that that's decreasing. But what about from -1 to -2? They just see the number 1 to 2 or from 2 to 3 and they go, oh, it's increasing. It's not, it's decreasing. We are decreasing as we move from right to left. This is where gamma can get tricky because in certain cases you're dealing with negative deltas. And so that's what we have to always keep in mind. So with that little side note right there, let's go take a look at positive gamma. The thing that you want to memorize for positive gamma is that as the stock price rises, delta rises. Notice it's a direct relationship. Stock price up, delta up. And conversely, as the stock price falls, delta falls. That's what it means to be positive gamma. Stock price up, delta up, stock price down, delta down. It moves in the same direction. Your delta moves with changes in the stock's price. Now, anytime that you buy an option, whether a call or a put, you have positive gamma. So let's take a look at a long call option. And let's say that way out here to the left, you can see that this blue area is fairly flat. So that means we don't have a lot of sensitivity to changes in the stock's price. So we might have a delta of, let's say, 0.30 down in here. If the stock price moves to the right, we are moving up the blue curve, we're getting steeper. We might be at a delta of 0.5 in this range. Stock price rises some more, we're moving up the blue curve. Now we might have a delta of, let's say, 0.80. Stock price continues to rise, we're going to eventually hit, let's say, delta 0.95. And if the stock price moves far enough, we will eventually hit delta 1. But the thing to notice is that this is positive gamma because we have purchased an option. So what is that showing you? It shows that as the stock price rises, moving from left to right, your deltas are rising. We went from 30 to 50 to 80 to 95. What happens if the stock price falls? Well, then your deltas fall. We're going from 95 to 80 to 50 to 30. Okay, so notice the relationship. Stock price up, deltas up. Stock price down, deltas down. That is positive gamma. However, what happens if we look at a long put option? A long put is also positive gamma. Remember, anytime you buy an option, call or put, it's positive gamma. But now here's where it starts to get a little weird because we're dealing with negative deltas. So let's say if the stock is way down in this range somewhere, we might have a delta of minus 0.95. And that means that we're behaving like short 95 shares of the stock. It's leaning to the left. That's what the negative deltas are showing us. That just means as the stock price falls, profitability is rising. It likes to see falling prices. So if the stock price rises, what happens to our sensitivity? Well, we're not quite as sensitive. We might have a delta of minus 0.8. Stock price rises some more. What happens? We're starting to fall down this blue curve. We're getting less steep. We might now be at delta minus 0.5. And then finally, way out here to the right, we're getting fairly flat. We might be at delta minus 0.30. But this is still positive gamma. Take a look at what's happening. As the stock price rises, moving from left to right, what's happening to your deltas? Your deltas are rising. See, you can tell where people get tripped up. They go, oh no, your deltas are falling. We went from 95 to 80 to 50 to 30. No, you didn't. Those are increasing because you're talking about negative numbers. So as the stock price rises, your deltas rise. And conversely, as the stock price falls, as we move from right to left, your deltas are falling. You're going from minus 30 to minus 50, minus 80, and minus 95. Those numbers are getting smaller. Okay, so those are two cases of positive gamma. Let's take a look at some negative gamma. What happens here is that as the stock price rises, your delta falls. You see how it's moving in the opposite direction from positive gamma. And conversely, as the stock price falls, delta rises. That's what it means to be negative gamma. Stock price up, delta down. Stock price down, delta up. The delta is moving in the opposite direction from the direction of the stock. That's what negative gamma is showing you. So let's say that we sell a put option by itself. Anytime you sell an option, you've got negative gamma. This could also be a covered call, long stock short call. It's a short call. You have negative gamma. So notice that way down here to the left, the blue line is kind of sloping up to the right. We have positive deltas, and it's fairly steep. So that might be plus 0.95 deltas. Stock continues to rise. What happens? Notice that the blue line is getting flatter. So as the stock price rises, we're starting to move up into this region, and we might see that the delta moves to 0.5. As the stock price rises more, look what's happening. We're starting to flatten out even more. We're losing deltas. We might have a delta of 0.30 in this range, and way out here, we might eventually hit delta 0 when we're completely flat. But look what negative gamma is telling you. As the stock price rises, your deltas are falling. Your deltas are moving in the opposite direction of the stock. And conversely, if the stock price were falling, our deltas would be increasing. We're going from 0 to 0.3 to 0.5 to 0.95. That angle of that blue line is starting to increase as the stock price falls. It's another way to understand that you are increasing your deltas. Or as the stock price rises, that blue line is starting to flatten out. It's subtracting off your deltas. That's what negative gamma is doing for you. Okay, let's try another one. What if we had a short call? This could also be short stock, short put, kind of the counterpart to a covered call. But down over here, we might have that deltas are 0, fairly flat. And as the stock price rises, notice what's happening. We're starting to increase the angle of that blue line, but we're leaning off in the left direction. So those are going to be negative deltas. We might move to negative 0.5 delta. As the stock price rises some more, we start getting steeper, but off into the negative direction. We might see delta is minus 0.80, and then way out here, we might see that delta is minus 0.95. So once again, remember what negative gamma is showing you. As the stock price rises, your deltas are falling. That's what negative gamma means. And isn't that true? We're going from 0 to minus a half, minus 0.8, and minus 0.95. Those numbers are getting smaller. Stock price up, deltas down. And in the reverse direction, as the stock price falls, what's happening? Our deltas are increasing. We're moving from minus 0.95, minus 0.8, minus 0.5 into 0. Those deltas are getting bigger because they are becoming less negative. So yes, I know that it can be confusing, but you can also see where if traders are trying to just figure it out intuitively, what positive and negative gamma are showing you, it can get really, really confusing. But if you just remember that positive gamma means that the stock and the deltas move in the same direction. Stock price up, delta up. Stock price down, delta down. You will always get the right answer. And then for negative gamma, it's the inverse. Stock price up, delta's down. Stock price down, delta's up. So that definition of gamma becomes very easy. The one thing that you have to remember is that when you're moving from left to right on that number line, that the numbers are increasing. Even if you're dealing with negative numbers, those numbers are getting bigger as you move from left to right. And as you move from right to left, those numbers are getting smaller. And if you just keep that one point in mind, positive and negative gamma will immediately fall into place. And so for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.